Okay. Hello, everyone. Welcome to this week's weekend weekly report, intervening on the market, September 29th, 2024. Got a lot to talk about today. Let's dive right in, taking a look at key components of market health. Major indexes up, down volume, and new highs, new lows, all positive. Individual stock participation, we're still keeping at neutral, although we did move the STEM model up to easy dollar green as of September 25th. Of course, I think this is somewhat semantics at this point, although I do think in the rear view mirror, we can say that, we have had a fairly decent environment, although there's been some potholes, and I'm going to talk about that in just a second, or just in a few minutes later. At the end, I'll go over some examples of some of the uh, challenges that we've had with some of the pivot points. And then, of course, some have done well, and we'll take a look and compare and contrast that. So anyway, we're on that easy dollar environment on the STEM model. I think we could very easily be either, orange or green. I still would say that I would err on the side of, a cautious optimism. You can see right here, looking at the S&P 500, and again, keep in mind, the STEM model is not an index timing mechanism. It's purely based on how the stocks are acting. Um, but just to point out where we went on orange and now where we went on green, as the S&P started turning up and went through a fairly decent sized base, you can see forming somewhat of a VCP itself. Coming up that right side, that's where we started to see stocks breaking out of bases. Matter of fact, just prior to that, and that was what gave us the traction to allow us to move it up to orange. And now we've seen some upward action in a number of breakouts. There's been some that have failed, but on balance, we've got a good number of stocks that have made progress, good net performance on balance. And now, of course, moving to green. Now, this a lot of times we go to green right into a pullback because, again, you to get to green, we have to have that decent market for a little while, and that will get us sometimes overbought in the short term. You can take a look at the S&P 500 here, right, and see on the short term. We did get a bit overbought, and now we're getting a little bit of a divergence. So this could lead to a pullback very easily, and that's where we want to look and make sure that during that pullback, we're not seeing too much weakness and base failures, and that we're getting more constructive action and a proliferation of additional setups here. We like to see several waves of setups once we start to see stocks working from bases. I'll get to that in a second. At the end, I'm going to go over and we're going to take a look more in depth at the individual stocks, and what I'm talking about right now we'll move to later on. But let me just stay on the overall general market. SPY advisor models 25 and 33 are still on the buy signals. Of course, they both went on a buy signal January 13th. 25 went briefly off and then right back on November 17th. So for all, effectively, we've been on a buy signal since January 13th, still staying firmly bullish on there. None of the indicators right now are at risk of raising cash here or going, certainly nowhere near going to a sell at this point. Rates, of course, as I talked about last week, just go over this once again. Rates have come down, and that should be bullish for the market. We're going into a period where we've got a fairly strong tailwind on a number of fronts. Certainly the presidential cycle, and as I pointed out, this is a wacky presidential cycle, but I think we're still looking at a tailwind as far as the seasonality factors are concerned. Second half of this year, first half of next year. One thing that I noticed here, and that I like that what I'm seeing here, is the sentiment has gotten a little more bullish, meaning that the bulls have moved up. When you look at the surveys, this is the Investors Intelligence Survey, you can see the bulls have moved up with the market, but so have the bears. And that's something that I like to see, where the rally, when you get breakouts and you're coming out of bases with individual stocks, I like to see a disbelief of the rally and not see too quickly the bullish sentiment come in. And you could see, like right here, when we came out of this last pullback, um, on the S&P 500, as you were breaking out, the bears started coming in. The bearish sentiment started coming down. The bulls started coming back. Here you've got the bulls coming back a bit, but not too fast, and you've got a little bit of bearish sentiment actually creeping up. So that's a distrust of the rally, of the breakout, and trying to call for maybe a top here. And from a contrarian standpoint, that's good. That's what we want to see. Now, I talked about this potential, or I should say, just looking back historically, the last few times that we had big declines post Fed cut. The declines were huge. They were bear markets, major bear markets, and certainly there are some elements here that are lining up with that scenario, with those precedents. One is we have the unemployment rate turning up. We had the same thing where we went back here and we take a look at 2000 going to 2002 and also '07 into '09. Similar situation where we had unemployment moving up. Now, the market usually moves inverse to the unemployment rate. So that would say that, as the unemployment rate's moving up here, this market needs to come down. We also have, when you look at some of the economic tea leaves, you look at ECRI, Weekly Leading Index, the LEI, a whole host of economic readings that are showing that weakness down to levels that have preceded recessions. So that, of course, has some people concerned that with the Fed raising the rates before, that we would push down into a recession. Now rates are coming down, and we're going to see if that alleviates some of that. There is a valuation picture that is also similar to the beginning of those bear markets. Now, these conditions could persist for a while too. Don't think that, even though maybe they turn out to be that those precedents roll into a similar type conclusion here too, but it doesn't necessarily have to happen today, tomorrow, or even within the next few months. So again, there's things to keep an eye on here, and I'll get to where I'm going with all this in just a minute. We did have a correction in the market here. Roll forward here, about 16% on the Nasdaq. These have been really sort of garden variety corrections within a bull market. They're normal. We did get the yield curve to start uninverting. Some people have pointed that out to be a bullish factor, when in fact, when you look back, again, prior to those big bear markets where we had the first rate cut, a similar situation where you had the yield curve actually uninverted, and that was the beginning of a bear market. So there's a number of things for the bears, or the those who are nervous about the market, to point to. But the thing that I think you really have to pay attention to here is, of course, the individual stocks and how they respond to all these news items, and what's happening with breakouts on a more myopic level. But on the big picture, as long as the economy can stay growing and not overheating and not plunging into a recession, you could stay overvalued for an extended period of time. You could have all types of economic readings and things that look ominous persist, and the market can move much higher. So again, we have to keep things into perspective here. The advanced decline line is hitting new highs. So I'm always looking at the technicals as my main lead indicator. That's what, if everything looks bullish as far as whatever sentiment, economy, if market's rolling over, stops are getting hit, I'm out, and vice versa. If the world looks like it's coming to an end, but stocks are breaking out of bases, everybody's bearish, and everything looks terrible. We're in a recession, but stocks are breaking out of bases. I'm buying the breakouts. It's that simple. So I really, the technicals have the final say with me. Now, looking at some of those technicals, the VIX, it's still a little bit elevated. And I think that's what we're feeling in some of these breakouts, where we have some work, some don't. And we've seen a few with abrupt failures, which I'll show in just a second here. And I think that's normal for this part in the cycle, where we've got volatility is still a little bit elevated. I'm not sure if although we've moved up in the indexes and we're breaking out here, I think there's still a little bit of work to do as far as the type of stocks that we would traffic in. And I think the IBD 50 is best telling that story. If you remember, Last week, I talked about how we made the turn on the IBD 50, meaning that we turned up, took out the high after we mark ourselves up off a low, had that first pullback and take out that pullback high. That's what I call making the turn. That's the first sign that the trend has now changed. The intermediate or short-term trend that was down has now gotten back in gear with the longer-term trend. So we're still in an uptrend here, but you can see, although we've been in an uptrend for a fairly good number of months on the major indexes. On the IBD 50, we really just started turning into an uptrend this last year. So again, I'm hoping that we can play catch up here. We could get a good easy dollar environment in the type of stocks that we traffic in. But if you look at the IBD 50 on a daily, you can see that we're building that right side here, where they haven't even completed that right side. So what this would tell you, if stocks are going to play along, with this picture, is that this is about the time where over the next week or two that we should be looking for those consolidations, those right sides to build, and subsequent breakouts. And this is where the easy dollar moving to green may be timely and may be right on schedule here. So now we just have to wait and see how things play out if the train comes in on schedule. Now, longer term, real long term, looking all the way back to the secular low or start of this secular bull market, going all the way back to '09. We've been in a secular bull market with some cyclical bear markets along the way, or certainly a couple, the COVID decline, the recent decline that we had, the most recent bear market. So it doesn't mean we can't go longer, but we certainly are getting a little bit long in the tooth here, and it's still intact. But this is why I would keep one foot, by the door on a longer term basis. And the way that I would, what I would use for that, as far as the overall bigger picture on the S&P 500, the major indexes, is our strategy model, our S&P 500 strategy model. If this should start to raise cash, especially if it should trigger where you get a couple of the indicators, meaning that the 33 goes to from 100 to 33, or the 25 goes from 100 to below 50, or at least a 50, we get it, a couple of the indicators start turning down, I would definitely raise cash. And if it goes on a sell, I would take it very seriously, because again, that could mean that now we've got the start of something more serious, longer term, and we don't want to be involved in the market, certainly during a secular bear market. But right now, the bull market is intact. I mean, I would say that with the AD line hitting new highs, our SPY model firmly bullish, meaning that all the trend following mechanisms are still in an uptrend. We've got this Goldilocks economy, and as long as that can hold up, I think we're in pretty good shape. Volatility, like I said, is still a little bit elevated, and I'd like to see that come down. And I'd like to see a convergence of the volatility coming down at the same time, the IBD 50 breaking out of that right side, and then stocks proliferating, setups and breakouts, and coming out of bases. And that's really, the whole thing culminating from the big picture all the way down to, very, very specific, more surgical sort of timing approach. One second, I got to pause this for a second and move my screen over so we can look at stocks. It's just going to take me one quick second here. Okay, that should have done it. Okay, now we're going to take a look at some individual stocks. I want to look at some of the breakouts that occurred. I want to look at some of the failures and sort of compare and contrast that. Let's take a look at a few. This isn't in really no particular order. Just looking at some of the stocks that came out of bases, and what we're looking to see and what we're not looking to see, or what would be normal versus abnormal. Having these pullbacks after a breakout are completely normal. And if we can get back into new high ground, particularly if the pullbacks are on lower volume and the breakouts are on high volume, that's considered a natural reaction, what I call tennis ball action, getting back into new high ground. So this is what we're looking for now. You got a number of names that have broken out, something like an EAT. You had a nice breakout, 1, 2, 3, 4 out of 6 days up. This is absolutely, acting normal. There's nothing wrong with this. It could pull back even all the way to the breakout, and that would be normal. But we want to see this after maybe a week or two back into new high ground, see that tennis ball action. Thin name like or symbol like FLXS, another one broke out, pulling back here. That's very orderly. Even bigger names like Meta moved up here, marked up 1, 2, 3, 4, 5, 6 days up. 1 day down, so you got 6, 7, 8 out of 7 out of 8 days up. really good action coming out of that base, and now a pullback would be normal. MNDY, another one you broke out, maybe not. Now this one came out on a little gap here. Maybe it's going to be a little more volatile, but a pullback here is somewhat normal. LB, this one wedged up a bit and it got ahead of itself, on a sort of compressed right side. So coming back in here is totally normal. If I were to buy this and sort of, chase this right side here and maybe get lucky on this one and get a decent short-term gain, because it's run up that right side and it's V-shaped and it didn't really build up that right side, I probably would de-risk right into that and just sell right into that, take some profit, and then look to maybe re-enter if it holds up. Something like Spotify. Another one comes out. This came out on a gap, of course. Well, I think we got in this earlier, though. What was the date? If I could find it. Let's see here. Just scroll up. Right here. Yeah, it's 917. Yeah, so I believe it was right here. Yeah, so we came into it right here. A couple days later, it gapped. Big up day. No news on that, I believe. And again, this has moved up quite nicely. A number of days, 1, 2, 3, 4, 5, like 6, 7. Yeah, 7 days in a row up. This is certainly due for a natural reaction here, a pullback. Now, again, you get a decent gain. If you're a short-term trader, you sell right into that. If you're maybe more of a swing trader, you might want to de-risk and look to re-enter on a pullback. Or if you're going longer term, you're going to just stick with it and maybe improve your stop to reduce the risk a bit. TSM, another one, had a pretty good sized down day on Friday, down almost 5%. Came out on a gap here, a little short, little 1-2 day pivot. So again, very normal to pull back here. Some of these have 50 days that are in downtrends. You're getting angle warnings. That will also lead to some pullback. Uber wasn't really fully built out on that right side. So this is a big base. This would be very normal to build out, even for a number of weeks, to build out here and just build a base. And that would be where I'd be looking to potentially add to a name like this. VHI. So this is one that came out in a little gap. I really wanted to buy this. I was talking to Mark Ritchie and Brandon, telling them that I see a shift into some of the smaller names, the smaller caps, and they're starting to break out and hold up, and I wanted to start playing them. And this one came out in a gap. It was thin and came out quick. We didn't get in it, but what a big move that made. HOOD, and again, just normal action right now. This is a bigger base. And this is more of what we're seeing, and I'll show you a couple here that are more characteristic of a market that is still building that right side and hasn't yet fully developed, where you come up off of a pullback buy and it still looks like this could spend some time building a right side, just like something like a wing stop, where you come up the right side, you don't really build much of a right side, and now it comes in, it spends a little time building out that right side along with that IBD 50 index. GEV. I mean, this is the type of action you want to see. This is one of the earlier stocks to come out. It came out in a little gap right here. Here's your natural reaction. A couple days and you're back in new high ground. And now you run up and you get short-term extended. And this is a huge a huge mover here, about 40% in just a few weeks. So again, this is one where we had a question in the Q&A about this, and I'd probably be looking to sell some of this here if it starts coming down, if I didn't already on that outside day, and finance my stop at least, or finance my risk, move my stop maybe even up, and backstop if you're up 40%, maybe backstop 30%, sell half of it, backstop 30%. Whatever you decide that you want to protect, whatever gain. But that's what we want to see. Now let's take a look at some of the challenges, or the stocks that were challenged recently, and some of these breakouts that didn't work as well. Something like a TRAK comes out all the way down. We very often get a question what to do with a stock that squats, if we could still buy it, or how big of a squat is ominous and how much is normal. This is getting to where this is more ominous. It's a really good size squat here and closed right on the low. So next day completely falls apart. This is one that you definitely would have wanted to maybe reduce there, or really, really keep this teed up to run to the exits pretty quick if it doesn't stay inside. QNST, another one where you come out here on the pullback buy, it squats, next day comes in, you get some big volatility. Now, This could still set up. I mean, this is a little bit erratic here, and I would want to see a number of weeks, but it could. There's a number of those, and there's some that look better than others. Something like an RNA. Here's another one. Turns up from the pullback buy. We actually put a full size position on this in the Minute Select portfolio, but got knocked out. Uh, Follows through a bit. Big outside day. You just got to punt it. That's just not what you want to see. Whether it resets or not, that'll be yet to be seen. ANAB, another one. You're over here pretty tight on this right side. You come up from the pullback buy, it just doesn't work. Goes south. Again, you got to exit that. TAYD, another one which was looking pretty good from a pretty decent sized base. This was looking natural, and I don't have to tell you where it starts to look unnatural, right? Right. This is definitely what we don't want to see. Now you've got some names like CRNX, where, okay, so this breaks out here, tries to break out at least, comes through on 919 and can't seem to rally, but this is still working on a right side. This could set up. So we keep this, on the list. So we keep watching it. Something like a TNDM. Again, didn't work out. You got that outside day. You're still working on that right side. You see, when you look at the bigger picture, this could very easily tighten up here and be viable in a week or two. So we don't want to take those off the list. We want to keep them on a watch list. PRAX, another one, came out here, experienced a few days, but again, this might set up. Lilly looking a little bit ominous on a short-term basis. We wanted to see this tighten up and break out. It went completely the opposite direction, closed below the 50. So I wouldn't touch this here, but I'd keep watching it, just like something like Goldman Sachs. Here's a perfect example where we went in here, right? Same day, outside day, we're out. Okay, if it's going to hold up, and it's going to stay in that, in that right side, it could tighten up, and we'll be right back in it. And that's exactly what happened. We got in the reversal recovery, and it squatted again now. But this is acting normal, and I could see this very easily going inside, maybe a couple of days. Maybe the market pulls in a little bit, and then from there breaking out, and that's looking even better at that point. And if I wasn't full on my position, I'd be adding to it, or if I didn't have a position already, I'd be buying that. Let's see what else. Now SDHC, here's one where this is a little more ominous, but I do like the fact that it closed at least a little above the mid-of range. This could reset. This could reset. You can keep an eye on this, but it would need to tighten up. So just giving you sort of some examples here. Like I said, in no particular order, but to compare and contrast what we want to see, what we don't want to see. Let's take a look here at some of the stocks that we'll be considering for focus list. Apple, of course, it's got a little bit of supply here that we've seen where the stock is stalled out, above this 229-ish area, and got some reversals there, but that's certainly in a base. ALNY, another one trying to tighten up in this right side. It fell apart over here, and it's sort of retightening. I would, probably on a 1 to 5, I would grade this like a 3. I'm not too excited over it, but it is tightening up, and that might break out. Something like a BLFS. Looks like it still needs a little bit of work on that right side, but it's trying to consolidate. CYBR. Now, again, this isn't my final list, and I'm just giving you sort of my earlier in the day work here. I haven't finished, but these may or may not make focus list, but I think many of them will. We got a bunch of supply here, right where this is trying to tighten up. So we want to see this tighten up. It's a large base. I love the larger bases, especially if they can go through a number of iterations and tighten up real tight on the right side. So we're looking at that. Goldman Sachs, of course, as I pointed out. CPAY, another one, big base, classic coupled handle. Just watch this right side. We talked about FLXS, GSHD. This is starting to tighten up. Whoops, hit the wrong button there. This is starting to tighten. Hit it again. There we go. Starting to tighten up here. I had some stops on here just to watch it if it gets above those levels. So if this can stay tight, I'd love to see it open up quiet tomorrow and break out. Had a big up move here and a lot of volume. A little bit of volume here, but it just sort of stayed in that tight area. I'm not going to make too much of one day. I think that was options expiration anyway, so I can cut that some slack. So far acting pretty good. This one's very tight. CDNA, yep, trying to form a little cheat area here. LDOS. Another one where again came to a little low. I'm sorry, the pullback buy here, just trying to form a pivot here. FNGS, the FANG index still could tighten up here. And this is going to basically mimic stocks like Nvidia and so forth. And of course, we have Nvidia also on our list here of stocks to watch. 50-day starting to turn up. If you remember, I talked about how if you bought this from the pullback buy over here, you probably run into this supply, and then it would cause the stock to pull back and build that right side and create more symmetry. It's exactly what's happening, and this is completely normal. Let's see what else. Netflix, another one where you came out a couple days in, still acting normal. Can't criticize that for acting abnormal just yet. PRAX. Ollie's, this is another one where, I didn't want to see this come in on me. However, it was a little short. And, when I made this purchase, if you remember, I pointed out how this could very easily undercut this low, create a shakeout, and that could be part of still building out this right side. I still think this is a potential for, maybe building out, and it may take a little more time. So I'll just draw it something like this. Maybe we take a little more time, and then we have to come out of a larger, more symmetrical right side. So I'm going to watch that. That's one that I'm definitely interested in potentially adding back. Ryan came off the 50-day, real strong. Couple day pullback. I would look on this one if you're interested. Look to buy a pullback buy. TREE, Lending Tree, of course. A little pullback here, another pullback buy, potential pullback buy setup. Shack's another one. This is very similar to, and this just goes right with that whole theme of the IBD 50 needing that time to build out that right side. And you see a lot of stocks that are coming out of these pullback buys and a little premature, but they're still in bases. And if they had a little bit more tightening, maybe another week or so, some of these would look perfect. So this is really, everything is coming in on schedule. Now we just have to make sure it continues to improve. That's the real key here. So remember, I talked about how there's supply here. Very easily, we could run into that supply and stall the stock out. That's why we want to see this tighten up. I want to see this stock tighten up even more, build out this big base, but I'm very interested in Shack here and adding to it, or even initiating a new purchase if you don't own it. But I'd watch it for a bit. Same thing with SG. Now this one came off a little bit here, had a little pivot leakage, but came right back on Friday. Yeah, if this tightens up around these highs, this could really start looking really good. Vikings, another one where was trying to set up a little base here, fell apart, but now you're building out this larger base. Get this right side to build out, whether it runs up and builds out up on the old highs, or if it pulls back here and creates a cheat. Either way, I'd be interested in it. ASPN, another one. Ran right up here. This is certainly a compressed right side. You want to see a compressed right side? That's a compressed right side. So the probability when a stock runs straight up like that, there's a very good chance that it's going to come in because it ran up too fast. It didn't build out that right side. It didn't have the time to consolidate and have the weaker hands absorbed by the stronger hands. And now we're going through that iteration and getting that VCP action. So this is starting to shape up over here on the right side. I know we had this. I think this was in a symbol drop box from some people looking at it. GEN. This one has already broken out, but I like the way it's acting. It's acting really well. DBD, another one where you're getting that right side starting to build out right here. You're getting that pivot. It's tightening up. Volume's coming down. That's getting constructive. This is a big sell-off here. And so you definitely have some clear supply of delineated right at this price here around that 45-ish. So that's where you want to see it tighten up and punch through there. That's the line of least resistance, as Livermore used to refer to. MOG, a little bit shorter base, but again, forming that right side. So I also have some on deck names. Fairly decent list. I'm not going to go through them all. We went through a lot of names already. So there's a pretty healthy list. It's just a matter now of whether these stocks start working and we see an improvement in the picture from having this difficulty of having some of these stocks have experienced this wide volatility. I'd like to see a number of things sort of happen around the same time. And that is this list hold up well. We get breakouts. We see the stocks that have already broken out, some of the positions that we already have open, still holding up on balance, and the volatility come down on the VIX, and the overall market act pretty well and not see too much distribution in the indexes. All that culminating together, we already have the backdrop of the economy. We have the backdrop of sentiment not being too frothy. So we've got the conditions where we could very easily have a decent market here, another leg up. That's what we got to keep an eye on, and just take it one stock at a time. And the main thing is don't guess and try to forecast. If things are working, great. Then you step it up. If they're not working, then you got to wait, because even if other stocks are going, but your stocks in your portfolio aren't working, well, then you're not building up that equity. You're not earning the right to play larger. So you've got to personally earn the right to play larger, and don't just jump in there just because you think it might get better or it's getting better and you're not participating and you feel like you're in the wrong stocks. Wait till you're in the right stocks. Wait until you get, because you could stay wrong for a while. I mean, the market might do well and you continue not doing well for whatever reason. So you need to keep it, personal and stay in your own lane. Let's see. I have a doctor's appointment tomorrow, which we could not schedule any other time than around the time that we have the um, Q&A. So I'm not going to be doing the Q&A tomorrow. I'm going to have Brandon and Mark do Q&A tomorrow. What I'll do is I'll do my Q&A with Mark Ritchie on Thursday. And so that I apologize for that. And that's about it. We'll see you tomorrow. Mark and Brandon will see you, and Bob will see you for Q&A. And I'm going to go back to finishing up my screening, and then we'll put our list together for focus list. All right. See you guys this week. Bye-bye.